Yeah.
Yo, what's up everybody? Welcome to Ali's World of Finance. In this quick video, we're going to talk about Shopify, and I'm going to give my opinion on the whole stock, and I'm going to talk about their business and their clients and some of the different things that they're doing, some of the products that they have coming out, and we're going to cover all the numbers. And then at the end of the video, I'm going to talk about my whole feeling on the entire stock and what my strategy would be if I was investing in Shopify. I currently don't have any stock in Shopify, but if I was investing in it, I'll basically break down how I would go about it and how I feel about the stock overall. So let's go ahead and get started. Now, when looking at Shopify, their business, basically what they do is they operate a cloud-based commerce platform that is designed for small and medium-sized businesses. Now, they also work with larger-sized businesses as well, and we're going to talk about some of their clients in a second, which are pretty huge, but they really excel in the small to medium-sized business category. Now, what they essentially do is they help the user sell their products. So if you want to sell your products through your own website, if you want to create a website using some of their tools and functionality to help you, if you want to sell through social media like your Facebook, or if you want to sell through a POS device like a point of sale device, then Shopify can help you with all those different things. And we're going to talk about the POS devices as well in a second. It's kind of like Square and stuff like that. So some of their clients, actually before I get to that, let me just say that they also operate through a subscription-based model. So you can subscribe to them. I think it's the cheapest is around $10 a month, but you can also get up to like $200 a month. And it's basically for different tiers where they have different tools and functionality for the user to sell their products. And they also give you analytical data as well to help you grow your business. Now, when looking at their clients, some of their big clients are Google, Budweiser, Red Bull, and Tesla. And I did not know that they had these major clients because they're pretty big. Let's specifically talk about Google. So Google has this other company called Zagat, and they're a restaurant reviewer. And that restaurant reviewer, they have an online store where they sell certificates of their reviews and stuff like that to the restaurants. Well, when Google was looking for a partner to a commerce platform to partner up with, Google basically has a lot of guidelines and strict guidelines and requirements that the commerce platform partner would need to follow. It has a lot to do with security and stuff like that. Well, all the other commerce platforms, they didn't meet their requirements or guidelines except for Shopify, and Shopify met everything and exceeded in everything, and Google was very happy and pleased with their experience with Shopify. So if I was an investor in Shopify, I would be very happy with that, because if Shopify is making Google happy, that goes very well for their company. Now, with the other companies, I saw them selling mostly merchandise and stuff like that with the help of Shopify, stuff that was branded with their logos, like t-shirts and hats and stuff like that. So it looked like it was mostly through like merchandise stores, but I don't really know too much about it. I couldn't really get a lot of information on that. Now, Shopify recently raised a lot of cash that is going to really help them. It's going to really help their balance sheet a lot, strengthen it even more. And what happened was that in May, so not too long ago, they sold 5.5 million shares. So they basically added these shares out there, and they sold them for $91 per share. Now, in August of last year, they did something very similar where they sold 7.5 million shares at $38.25. So significantly less, but obviously Shopify has grown a lot since then, so they would obviously get a lot more money now. Now, what that's referred to is, it's called a secondary offering, and it's very similar to an IPO. It's very similar to an initial public offering. And what it does is it adds all of this money into the asset category on the balance sheet, so it really helps their balance sheet a lot. However, it also causes dilution, and it dilutes the shares. It dilutes the shareholders' shares, and it lowers the EPS, because now your slice of that pie, now there's more slices of the pie, so your slice is worth a smaller percent, right? And when you have earnings per share, if there's more shares, it's going to lower the earnings per share. However, I mostly see it as a positive in the long run, because Shopify is a growth stock. It's not a value stock, it's a growth stock. So they really need to keep growing, and they've already grown a lot, but they need to keep growing. And this is going to really help them grow, because now they can invest this money into their company, or they can make other investments, or they can acquire another company, but they can do a lot of things to really help them grow. So it's very important. And now they basically have on their balance sheet, their assets is up as high as $883 million, and they have cash and cash equivalency of $589 million. And when I was looking at this, I didn't see any long-term debt either. So their balance sheet is actually phenomenal, and we're going to talk a little bit about that more when we talk about the numbers. Now, some of the products that they're coming out with that should be helping their company and helping their stock as well are a couple of things, but they're coming out with a new card reader, a new chip and card reader, very similar to like what Square offers. It's a POS device, a point of sale device that you can use through an iPhone or an Android or things like that. And it's developed by their new hardware team. So they actually had one in the past, but it was developed by a different company. Well, now they're making it in-house with their new hardware team, and a lot of analysts are saying that because they formed a new hardware team, this means that they will be developing more hardware in the future, and it's going to really help them, kind of diversify a little bit, but help them with their business, and it's going to help them grow, and it should help their stock as well. Now, Square obviously charges a percent every time that you use their device, and Shopify is no different. But if you have a higher tiered subscription with Shopify, then you get charged a smaller percent, but it's a very small difference, but you do get charged a little bit less if you pay more. And new customers will get the reader for free. Existing customers that want to replace the older one that was made by the different company, they can replace it for $29. So very cheap, almost nothing there. Now, some functionality that they're adding that is very essential and key to their business, that they really need to have this. I was surprised they didn't have it already, but they're adding this. It's wholesale functionality so that the user can sell in bulk sale at a discount. And they're adding this functionality so that they can basically split up their whole platform, the user, and they can have a different section where they can invite customers. They'll have a different password and all this kind of stuff, and they can invite customers onto that part of their platform, and they can sell in bulk sale at a discount, and all their other customers aren't going to see that they sell at a discount because they have to invite them into it. So then, other customers won't know, but if you know that there's a customer that is interested in bulk sale and stuff like that, then you can give them a specific discount. It's basically just how bulk sale works already, but it's functionality that they absolutely need to have, and they're adding it now, so it's going to help them. Now, let's look at the numbers, because it actually has some fantastic numbers. Like, you guys might be shocked by some of these numbers. I know I was shocked, but I got some of these numbers from, I believe it was streetinsider.com. And so, okay, let's start here. So their market cap is at $11.39 billion. They have 78.26 million outstanding shares. But here's where it really gets interesting. So their average EPS beat rate is at 60.8%. That's fantastic. Their average stock move, their average price move 1 week after their EPS is announced is at an average of 10.5% positive. That is amazing. That's fantastic. And their EPS growth rate is at 33.3%. Absolutely fantastic. The revenue growth rate is at 75.2%. Absolutely fantastic. Their EPS, the last quarters that they've beat EPS expectations, they've done it in the last 8 quarters. They've beat EPS expectations. So absolutely fantastic. Now, they're still not profitable, but they're really a growth stock. And let's look at how high they're valued, because they are valued actually very high. So for the last week, I got these numbers from marketwatch.com. For the last week, their stock is up 2.98%. For the last month, up 9.25%. The last 3 months, up 54.98%. Year to date, up almost 118%. And then in 1 year's time, up almost 216%. So their stock has just been on fire, guys. It's been going up like crazy. We've really seen a dominant, high trend. Now their 52-week low was at $26.35. That was June of last year. Their 52-week high was at $95.88. That was just a couple weeks ago. And they're currently at $93.50 at the time of recording this video. So they've only just kind of gone down just a little bit from their 52-week high. So in my opinion, they're kind of priced to perfection. They're valued very highly. They have a very high valuation. So if I'm going to give you my overall impression on Shopify stock, I would say that I'm very pleased with their numbers. I think that they have a very good, solid balance sheet. I think that they have a lot of cash to do a lot of growth, which is going to help them a lot because they are a growth stock. But they're valued very high, and their price is pretty high up there. I mean, you're getting, you're close to prices of Disney. I mean, you're another like $50, and you're at, the prices of Apple. So they're priced pretty high. And you could argue that some of those other stocks are actually better stocks. Apple has a lot of stuff coming up with India that's going to really help them a lot. Apple also has the new iPhone coming out. So there's a lot of different things. And you wonder if their price already so high, all of this growth, it might already be factored into their price. But they've been just smashing numbers and expectations for a long time. They have a history of doing it, and they're not profitable yet, but I think I was reading that they expect to be profitable by the end of the year. So very soon they expect to be profitable. And I don't really see why they wouldn't be, because it sounds like they have some great stuff going on for them. So let's kind of just summarize everything up here. So they have a high valuation. They're a rapid growth stock. Now, if you're a value or dividend investor, then this may not be the stock for you, because it's definitely not a value stock. It's a high growth stock. However, if you are a value or dividend investor and you want to diversify a little bit, and you maybe have a little extra cash that you want to throw into a risky stock, you want to take a little bit of a gamble, well, Shopify might be that stock for you. It's kind of a nice gamble. It might be a pretty decent gamble there. And the problem with growth stocks for me is that anytime that there's a sell-off, growth stocks are usually the first to go. Now, that doesn't mean that I don't like growth stocks, because I absolutely love growth stocks. I mean, I'm a heavy investor in AMD. The thing is that with growth stocks, I'm a firm believer that you have to invest with money that you do not need, because I'll give you a couple of reasons why. I see growth stocks as usually of a longer term play, especially Shopify. So you invest in the long term, like a few years, and because they can be more volatile whenever the market suffers, growth stocks tend to dip. So whenever the stock dips, then that's where you buy more, and then it dips and you buy more, and it dips and you buy more, and then it goes bankrupt and you lose all your money. No, I'm just kidding. But basically, like when it dips, you buy more, it dips, you buy more, and then it goes back up, right? And then it has that growth, and then that's kind of where you make that profit. But if you invest in a growth stock with money that you need, then it dips, you buy more, it dips, you buy more. All of a sudden, you get into a car accident and you need that money and you have to sell it, and you just lost like a huge amount of money there. You just took a huge loss. So you have to really make sure that you don't need the money, because it's not a stable stock. Like value stocks tend to be a little more stable, like dividend stocks, Apple, Google, like those tend to be a little more stable and just kind of slowly going up. But with a growth stock, with a rapid growth stock, it could go up rapidly or it could go down rapidly. So you got to be prepared for that, and it's valued very high right now. Now, if the stock takes a big dip, if it takes, like not even a big dip, but if it does take like a reasonable dip sometime soon in the near future, I would probably invest in Shopify, especially if I have some extra cash laying around. I definitely wouldn't mind investing in Shopify. But at the moment, there are some stocks that I kind of like a little bit more. I feel a little more confident in a stock like Disney. I feel a little more confident in a stock like Apple. And I'm already highly invested in AMD, so I'm already heavy into a risky stock. So I don't know exactly, if I should be throwing more money into another risky stock. I think I would probably wait for there to be a nice dip and try to get at least a little bit of value there. But anyway, that's pretty much it. That's pretty much all I got. So anyway, if you guys have any questions, leave them below. If you're new, please subscribe, because I break down stocks all the time. I actually did this stock because one of the viewers actually requested it. So if you guys ever want a stock, if you want me to analyze the stock, make sure you leave a comment and I'll analyze it. But if you can, try to make it like at least a little trendy in some way, because if it's a stock that nobody has heard of, then I'll probably only get like one view on that video, and it'll probably be the person that requested it. So, but anyway, just want to say thank you guys for watching, and I really appreciate everything. So I hope you I hope you all have a wonderful, beautiful day. All right, take care.